reimbursement management, and so much more. Our employee self-service empowers your employees with easy and quick access to manage their
Hello and welcome everyone. I'm Dolakwa Bimbola. We're excited to have you join us today for what promises to be an insightful and engaging webinar on payroll and the new tax act, a topic that, as you know, has been generating a lot of discussion across industries. For a brief overview of today's session, it focuses on how the new tax law for the year 2026 Act can affect payroll. With recent changes to tax laws in Nigeria, businesses need to adjust to how they calculate, deduct, and report employee taxes. Now, today we're going to break down what changed and what payroll teams need to do to stay compliant. We've got a great lineup of speakers and insights ahead of you. Now that we've set the stage, I am thrilled to introduce someone who will be co-piloting this session with me today. Please join me in welcoming Deborah Ido. Hi, Deborah. It's great to have you here. How are you?
Hi, hello, hello everyone. I'm Deborah. It's a pleasure to be here today. Now, introducing our first panelist, we have a quality assurance engineer here as human manager. Let's think of her as the guardian of a glitch-free payroll system. I'm introducing to you Diana Eschert.
Thank you. Hi, everyone.
Also joining Diana today is our product manager. We have think of him as someone with a flair of analytics, and going to be joining Diana today in dissecting and answering every question we may have today. I am introducing to you human managers Taiwo Olushola.
All right, thank you very much, Deborah. Now, to kick things off with a spark, we're honored to welcome our keynote speaker, the Chief Innovation Officer, leading human manager. With an experience of over 15 years, he's also an Anderson-trained professional in transaction taxes planning and compliance. If innovation had a heartbeat, this person is the one setting the rhythm. With a passion for transforming ideas into impact, he will help us connect the dots between tax reform, technology, and the future of payroll. Please welcome the brilliant Mr. Akin Omojola.
Hi, good morning, everyone. Thank you for joining us. It's nice to have you guys.
You're welcome, Mr. Akin. And before we kickstart, if anything got you guys curious or confused, don't be shy. Drop your question in the chat box. We are here to make sense of everything. Now, Mr. Akin, please, over to you.
All right, thank you, everyone. Welcome once again. It's nice to see customers on the line. It's nice to see friends of human manager, limited, assistant trainers people on the line. It's nice to have all of you here with us to talk about this very important topic. If you have been in the Nigerian ecosystem as a worker, as a HR practitioner, this is probably one of the biggest news that's happened this year. Now, the truth is we were expecting it. However, now that it's happening too long, it's very important for us to understand and deal with details of the Nigerian tax law. I'll be sharing my screen with you right here so you can get straight into this session. Yes, as you can see on my screen, our title for this talk, for this webinar today is Nigerian Tax Act 2025, Implications for Your Payroll. As HR professionals, we will be tasked with leading these conversations in our various organizations. It behoves on us to be the ones who are championing this conversation, the nitty-gritty of it. Now, don't be scared. I know tax conversations can be very, very difficult to have. Please confirm you can hear me and see my screen. So as a way of introduction, the Nigerian Tax Act 2025 was signed into law this year by President Ahmed Bola Tinubu. And a lot of us are anticipating it. Different versions of the act have been discussed, read on the House, and eventually signed into. Now, tax is not exactly a comfortable topic for most of us because nobody wants money taken out of their pocket. However, tax is compulsory. Tax is a mandate. You cannot say I won't pay tax. The real issue is to look at how you can better prepare yourself, your organization, and your employees for the tax laws. Now, we have a lag period of this tax because it will not be effective 1st of January 2026, which is fantastic. It gives you and I a lot of opportunity and time to get ready for the tax initiatives. Taxes generally are obviously financial commitments demanded by governments from their citizens, and they are generally in two categories: direct taxes, like the ones we have on our income taxes, our company taxes, and indirect taxes like VATs and levies and all other kind of custom duties. Now, what are the key objectives of 2025 and Nigerian Tax Act? Number one, to increase government revenue, to widen the tax layers, to deepen the tax, and to reduce leakages. Number two is to encourage economic growth. When we look at the Nigerian tax of 2025, certain sectors that the government expects to improve in the economic outlook are also engaged in this tax act. They are probably giving relief in some cases like agriculture, some cases like education, or they are also the taxes on them heightened in some other cases. Number three is to improve compliance. The tax act did not just change how much we pay as tax, it changed the overall ecosystem. Who demands tax? Ombuds offices are created, agencies are empowered, and even the Federal Inland Revenue Service is changed by its name and as a function to the Nigerian Revenue Service. And finally, we want to promote fairness. So you will see that in the Nigerian Tax Act 2025, a lot of adjustments have been made to cover for low-income earners, people earn minimum wage and below. We'll see all of these details as we go ahead. Also, what are these tax acts? There are actually four of them that are significant. Number one is Nigerian Tax Act NTA 2025. We deal with actually the cost of tax, the pricing of the tax, how much the taxes are. Number two is the Nigerian Tax Administration Act, NTAA, which deals with how the taxes are going to be administered, agencies that are set up, and the laws that are being repealed from old tax laws. And then number three is the Nigerian Revenue Service Act, which creates and institutionalizes the Nigerian Revenue Service as the organization to come up after the abolition of the Federal Inland Revenue Service. Now, the engagements and the commitments of the Federal Inland Revenue Service are not aborted. They are simply transferred into the Nigerian Revenue Service. And the Nigerian Revenue Service and the Joint Revenue Board Act allows the Nigerian Revenue Service to not only help with managing the revenue service at the federal level, but also work with state and local government revenue agencies to do audits and to do like a joint review and joint audit of corporate activities. Now, as we go into the introduction, these are some of the important numbers you need to pay attention to. Number one is that obviously VAT on certain items are still 0%, or even completely tax exempt. For this, you might need to look at sections 186, sections 188, and 189 of the Nigerian tax. Now, at this point, I'm just telling the general ideas about the Nigerian Tax Act of 2025. Some of this may not actually affect your payroll, but it's even important for you as a practitioner in the industry, as an HR person, and as stakeholders in your business to have a general idea of some of the things that are affected in the new Nigerian Tax Act 2025. Minimum tax rate for employees any below minimum wage is 0%. That means that if you're any below minimum wage, pay 0% as tax. This is one of the things that are maintained in the new Tax Act, that it doesn't repeal from the tax act. Now, but again, these are positive things. On the negative side, we have more finite penalties, more defined penalties for failure to adhere to the Nigerian Tax Act. You have, for instance, if you fail to file on time for the first month, to incur a surcharge of 100,000 naira, and it grows by 50,000 naira every month for all subsequent months. Also, the law is strictly about who you can engage if persons are registered taxpayer. So no longer can you just engage companies anyhow. If you engage companies that do not pay tax, you are liable to up to 5 million naira charges for awarding contracts to unregistered taxpayers. Now, more interesting facts we can see is the fact that, number one, like I said earlier, the Nigerian Revenue Service has been, the FRS, Federal Inland Revenue Service, has been named as the Nigerian Revenue Service. What's in the name? This Federal Revenue Service is responsible for the collection of revenue for the federations and federal taxes, and working with state revenue services and local revenue services in joint tax collection and joint tax audits. Also, like I said earlier, there is a greater compliance demand in the new tax act. Then finally, another interesting information that you need to pay attention to, not just as an individual, but also as HR organizations, is that there's now the development of a tax ombuds office. The tax ombuds office is supposed to help resolve complaints that we have about tax. So the tax man is nearer for us, not just to charge us, but also help with resolution of complaints that we have, and to ensure fair treatment, not just for the country and for the government, but also for you as an individual taxpayer. Section 43 establishes this office, and we are looking forward to see how the government will implement and execute this particular function. Other rules is the fact that certain rules have been repealed or amended completely. Certain previous laws have been repealed or amended completely. And for a list of them, we can't go into all of them. Please consider reading sections 196, section 197, and sections 198 of the new Nigerian Tax Act 2025. Also, the idea of derived income. What do we mean by derived income? How do I say that my income is generated in Nigeria or by a Nigerian company? This is expanded further in the new tax. The idea of residence is also addressed in Section 17 of the Nigerian Tax Act. Section 17 will help you to establish who a non-resident or a resident individual is and what kind of taxes are they liable to pay. So a lot of people who do gig work, if you have somebody who employs people outside the country to do certain functions, if you're in the maritime sector, we want to know how many days of activity onshore will be considered taxable. All of these are defined and discussed in Section 17 of the Nigerian Tax Act 2025. Also, the presumptive tax is discussed in Section 29. As presumptive tax deals with taxes for people who are probably in the informal sector, who do have a formal economic behavior where you can tax them. The law actually empowers the minister to define how those people ought to be taxed. So we'll see more of this in Section 29 of the Nigerian Tax Act. And of course, VAT as usual is discussed in Section 186, Section 188, and Section 189. Now, having looked at the tax law 2025 in overall sense, looking at the parts that speak to corporates in general or corporate behavior, now let's look at the part that affects us, most of us here today. Most of us here today are here as payroll practitioners, as HR professionals, as people who manage benefits, welfare, and payments and salaries for the organization. So let's take a look and see how you and I may be affected in this way. Again, some quick and important numbers for us to pay attention to. You can see on my screen, we have 500,000 naira per annum or 20% of annual gross taxable. The new law introduces a relief called the rent allowance relief. It is either 500,000 naira or 20% of your gross annual income, annual taxable, whichever is lower. The law is giving an additional relief of either 500,000 naira per annum or 20% of your annual gross taxable income as rent relief. We'll see what other things affect how this relief can be enjoyed. Also, our minimum wage in Nigeria is 6,000 naira. It's not from this tax law, the minimum wage of tax law of last year, but I think it's an important number to keep in mind as we discuss these conversations. Also, finally, is the fact that there is now a 5% cost or tax on any benefit in kind that is taxable. We need to really pay attention to this section because it affects what benefits we can call a benefit in kind for our cost for our staff, what benefits a company can provide, procure for their employees, such as housing, transportation, any kinds of benefits in kind that does not actually affect the staff state, still come taxable in the new tax laws. So how is your payroll affected? Number one, the tax table itself. In the old tax law, as I will show you later on, the highest band of taxes was 24%. That means if you earn more than the highest band of employees, you'll be paying taxes at 25%. But in this new tax, which is also a progressive tax system, in this new tax act, the highest bands now pay as much as 25%, a quarter of their income as taxable pay. So the employees in the highest bands might pay as much as 25% of their benefits as a tax item. Number two is the removal of consolidated reliefs and personal reliefs. If you remember in the old tax law, there's a 20% consolidated relief, 20% of the gross taxable pay that was considered a relief on your taxes. In the new tax law, however, this amount has been moved completely, as well as the personal relief of 200,000 naira or 16,000 naira on a monthly basis, 200,000 naira annual or 16,000 naira monthly. Personal relief has also been removed from the new tax. In its place has been added what I mentioned earlier, the rent relief of 500,000 naira or 20% of annual taxable pay, whichever is lower. In the new tax law, you can enjoy a rent relief of either 500,000 naira per annum or 20% of your annual taxable pay as a relief. However, it is whichever is lower of those two values. Also, in the old tax law, loss of income was treated almost like a capital gains tax. So what do we mean by loss of employment income? Let's say, for instance, you have an early retirement system organization where you pay staff off, or other kinds of retirement where you actually lose office or lose employment income. The law magnanimously has now increased the threshold from 10 million naira to 50 million. In the old law, you start paying tax once it's above 10 million naira. However, in this new tax act 2025, you only start paying tax once you exceed 50 million naira, and you pay the excess above the 50 million naira. So if you have somebody whose early retirement benefit is about 40 million, in this new law, they do not pay tax. But if you have somebody above 50 million, maybe 55 million, they will not pay tax on the entire 55 million. They will actually pay tax on the 5 million extra on top of the 50 million. This is one of the benefits, one of the leniencies of the new tax. And like I said earlier, BIKs are very taxing. The only exempt items when it comes to benefits in kinds are things like canteen lunches, lunch vouchers, meals at work, uniforms for your workers, work tools, or protective clothing. Most other items that we typically call benefits in kinds are now taxed under the new tax. Okay, so let's go to the meat of the matter. In the personal income tax, we have number one, things that impact your payroll. First of all, the scope of the chargeable income has been expanded. So before, we would only consider salaries, wages, maybe overtimes. However, right now, the new tax law takes you as an individual, regardless of the employment. In your income for the year, you must consider if, for instance, you receive rent, maybe you own a home, and you let out to people and receive rent for it. The new tax law involves your digital assets. So if you get paid in cryptocurrency or you get paid in any kind of new digital asset system, they're also involved. Even some of your investment income are now part of what the government will consider as part of your annual income to generate your taxes on. Okay. Number two is the fact that you have a revised personal income tax rate, which is shown on your screen. You can see before in the old law, your first 300,000 naira is taxed at 7%. But right now, your lowest band, which is your first 800,000 naira, every year, your first annual 800,000 naira is taxed at 0%. Whereas in the old law, your first 300,000 of chargeable or taxable income is taxed at 7%. This new leeway will cover for low-income earners, will grant relief to low-income earners, and add to the relief of every other employee in the organization. And you can see the changes in the old tax law. Anybody above 3.2 million was charged at 24%. But right now, once you are earning above 25 million, you get charged 25% of your revenue as taxable. So again, you can see some leniencies in the laws. Even though the average level for each band rises, the amount of people in it, the amount of revenue or income is widened. So we had that in the old law, from 3.2 million, you're being taxed at 24%. Whereas in the new law, you have to exceed about between 13 million before you get starting charge at 23%, and you must be exceeding 25 million in revenue, in income as a staff, as an employee, as an individual, before you get charged at 25%. Another thing we see is the deduction and reliefs, which we have discussed earlier. The consolidated reliefs are taken out, which are the items in red on the screen, whereas we are introducing a new rent. However, note this clause on the rent that for you to be able to claim rent relief, the government expects that you can provide accurate amounts of what rent you pay. In short, the government is expecting that you can defend how much each employee gets paid or pays for his rent. Now, a lot of commentators in the industry have said, what happens to people who own their own homes? Do they get this relief? Do they do any kind of transfer pricing? Again, these are some of the areas that we expect that with time, between now and January next year, clarifications will be made. But I think it's important for you as an HR professional to understand this, that there may be a need for employees to defend how much they pay as rent to their HR before the same items can be eliminated for them as rent relief on their paychecks. All other reliefs that were traditionally used to, such as pensions, national housing funds, national health insurance schemes, interest on your mortgages, voluntary pensions, annuities, life insurances, all those different reliefs from the past are retained. So whether you have a voluntary pension scheme that you are participating in, a life assurance scheme, an annuity program, you have a mortgage, you are paying the interest on that mortgage, all of these are deductible, or your pension from the employee side, all of these are deductible from your gross pay before your tax is completed. We've also mentioned minimum wage. We've also mentioned benefits in kind, and I think it's important to pay attention to some of the clauses on the benefits in kind. Section 14 strictly defines as taxable benefits whatever may be taken as a benefit in kind outside of food vouchers, canteen, uniform, protective clothing, or work tools. As long as the employer has paid for it, it is liable, it is considered a benefit. Most of these items are set as a taxable value of 5% of the annual value of the item. So let's say an employer pays for your rent, 5% of that value is set as taxable, or 5% of the market value of that benefit will be considered as taxable. So if it is a fiscal accommodation that the employer is providing, they are not paying rent, but they are just providing a house to live in. This will be assumed to be a maximum of 20% of the gross emolument of such employees. What the law is saying here is basically that if you, as an employer, you provide accommodation to your employees, that accommodation will be considered a benefit up to the value of 20% of the employee's gross employment, whichever is lower. So if the employee's accommodation is up to 20% of his gross employment, if the employee is being accommodated by the company must consider up to 20% of that person's annual enrollment as the value of that accommodation they are providing. So these are things and areas that I think HR professionals need to pay attention to in order to coach, educate the companies that you work in, educate the staff, and provide new policy arrangements for your companies going forward. Again, we've talked about the loss of office compensation, we've talked about the presumptive tax, and we've talked about the fact that the tax scope is much broader now. So for instance, honorariums, honoraria, grants, prizes that are all part of your annual revenue, annual income, the way the government sees it today. Finally, is the issue of residency. And under this, this section defines what is considered a resident Nigerian or resident individual subject to Nigerian tax. And you have things like number one, according to the NTA 2025, if the person is domiciled living in Nigeria, if the person has a permanent home available for personal use in Nigeria, if the person place of primary residence in Nigeria, if the person stays in Nigeria for at least 183 days every year, if the person has strong economic or immediate family ties in Nigeria, and the person is a Nigerian diplomat abroad, all these categories of people, any of these categories makes you a resident of Nigeria subject to Nigerian tax. It's important to know that even people who are gig workers, who work for companies abroad, but are living in Nigeria, even their global income will now be subject to tax. So there's a tax implication for residents and non-residents alike. So as we wrap up this session, what are the final thoughts and how do you come in the organization? What is your role? How does this new Nigerian tax affect you as a professional in your company? Number one is you need to find out and maintain institutional awareness. In many of the officials in this field are interpreting the law. The Gazette just came out a few months ago, and you need to stay aware of the information in the industry. You need to find out what are the things that the law says, what are the expectations of the law. As HR leaders in your organization, you need to be the ones driving the change in the organization. You cannot simply leave it to others to come. You cannot be a reactor to that situation. So stay informed about the taxes, the changes, and how they affect your companies and its policies, whether it's about accommodations, about benefits in kind, about salaries and wages, how it affects your employees themselves. You might need to be the one engaging employees and how it affects your budgets, right? The financial cost of your human capital in the organization. You need to also ask questions, seek clarification, form peer groups with your finance and accounts or legal teams in the companies. Sit down together, create sessions to discuss the implications and what parts of your operations as a company will be affected. It is beyond on you to do this, please. And in some cases, you may even need to bring external consultants in, bring your accountants, external accountants in, auditors to have conversation with them about the implications for your processes, for your policies, and for your people. Number two, be proactive. And that means that we are saying, for instance, you as HR policy makers in your organization and HR professionals must be the ones who are promoting compliance in the organization. We are the ones who should understand what the law says, promote compliance, champion these things, bubble it up to management level for consent and for activity for consent. At this moment, there will be a poll on your screen where we are asking you if you, for instance, you want to use your existing housing allowance as the basis of computing your rent relief, or you want us to create on your manager for you an independent rent allowance that we use to manage it. So again, like I'm saying, as you interact with this law more, you may need to make a decision around, are you going to be using your current housing allowance as the domicile position for your rent relief, or do you want to create a separate rent relief to handle that tax relief? Okay, you want to create a separate rent allowance to handle that tax relief. Okay, as I was saying earlier, you need to make proactive steps in your organization. You need to take a look at your current payroll. You need to look at what are the gaps. For instance, the question on the screen, do we push this relief to the housing allowance? Do we create a new rent relief, rent allowance in our organization? Are we making salary adjustments to compensate for people who the tax band is high? Are we making any sort of salary restructuring for our organization? What is the overall impact? What should my budget look like towards next year for my organization? In fact, at this point, let me point out that in Human Manager, we have created a feature that will show you briefly that will help you to sort of simulate what your payroll would be based on your current staff strength and compared to your current payroll, and know what the payroll structure will be if the new law was to apply on your payroll today. What will your financial responsibility level be for individual employees and for the entire organization? We have created a menu for you to do that forecasting, so to speak, or that simulation to show you before we finish this session. So once you are proactive, you are the one to draw up maybe policy changes, raise with management, seek approval for management decisions, and engage employees You need to coach employees. You need to explain to employees how the law is affecting them. They will not be as knowledgeable as you about the law. So it is your responsibility to make sure that you are available, you understand the law, and you are able to explain to employees, explain to management, seek modifications to your policies as far as how it will, this new Tax Act 2025 will affect you. And the good thing that we will have between now and 1st of January 2026 to make all these adjustments. We also are presenting this to you as a first step to introduce you to the areas you need to pay attention to. Please note that this does not replace your legal duty to seek compliance on your own. We are only adding value to your processes by also helping you to identify areas to pay attention to. Finally, in the next steps, you need to execute and review. And what do we mean by this? By this, we mean that it is your own duty to plan how the new tax will be implemented in the organization. It's your responsibility to manage what will change on your payroll, on your benefit schedule, on your total cost, what will change for employees. It's your right to know how compliance will be maintained going forward. And it's your responsibility to reach out to us if you need us to assist with salary-wide, company-wide salary changes on your human manager platform. We are willing and able to do this as consultancies to customers whenever they need to make relevant changes on their platform. Please note that automatically on the 1st of January 2026, we will migrate our platform in line with compliance to the new Nigerian Tax Act for 2026. Now, let me encourage you by saying that you don't need to be a finance or have a tax background. You don't need to be an accountant. You don't need to be a lawyer to interact with the tax. It's actually quite useful. And we have taken time to highlight in this presentation some of the areas you need to pay particular attention to as a payroll administrator, as a payroll officer, as an HR professional, as an HR leader in your organization. We thank you for listening to us. We'd like to take you through one or two scenarios now where you can see how practically the tax law affects us. Okay. If you are still with me on the call, what we have done here is to simulate a couple of scenarios about the tax law affects employees or organization. At the top of my screen, you will see the old law, and people are earning various annual gross values on column B of the Excel sheet. And we'll show you throughout as it breaks down into the taxable elements for the new tax. You can see for a typical person earning either 24 million per annum, or 14 million, or 1.4 million, or even a minimum wage of 70,000 per month or 840,000 per annum. This is the way it breaks down. Basic is 60 million for this user. Housing is 4 million. Transport is 4 million. Other taxable allowance is 4 million. And it breaks down to a gross of 28 million. Okay? Breaks down to a pension gross, assuming that the person uses only basic housing and transport for completing their pension, their taxable gross. Then you have their pension annual will be around 1.9 million for the 28 million gross category, or 1.1 million for the 14 million gross category, 1.6 million for the 112,000 for the 1.4 million category, and 67 million annual pensions for the minimum wage person. Each person also collects the pension. We are assuming all of them pay NHF, but again, remember that from the omnibus bill for last year, NHF is now is not compulsory for all employees in the private sector anymore. In the public sector, it's still a compulsory item, but in the private sector, it's no longer compulsory. So that may vary from employee to employee and from organization to organization. We just put a nominal 1,000 naira for NHIS, mortgage, whatever. Again, this will vary from employee to employee. And this, on the old tax law, they enjoy a standard relief of this value, and the total relief, which is the sum of all the reliefs from L to P, of 7.9 million for the 24 million category, 4.6 million for the 14 million category, 642,000 for the 1.4 million category. And this eventually leads to a computed tax value of 4.5 million per year. So for the man earning 24 million naira, or 28 million naira gross, okay, their tax comes to around 4.5 million naira. Whereas for the man earning 16 million naira gross, their tax comes to about 2.5 million naira per annum. For the man earning 1.6 million, his tax comes to around 107 per annum. And these are the monthly values of those numbers. However, for the same category of people in the new tax law, the bottom of my screen, the 24 million naira person or the 28 million naira correct person is now paying a tax of 4.6 million, slightly higher than what they were paying under the old law. So for the higher earners, for the heavy eaters organizations, their tax might increase slightly, especially for people earning about 25 million and the likes. Whereas also for the person earning 16 million naira gross per annum, their tax is now around 3.3 million naira per annum compared to the 2.5 million naira per annum. And then for the person earning 1.6 million naira per annum, just above minimum wage, their tax will now go reduced to 46,000 naira per annum. And this is because of the allowances around the 800,000 naira level that is taxed at 0%, as well as the rent allowance. Again, in all these situations, we're assuming they all get a rent relief. We're assuming they all have a rent relief as follows, and we're assuming that all other reliefs are removed in this situation. However, standard reliefs like pension, employee contribution, NHF, NHIS, voluntary pensions will manage or modulate these tax values based on what we see. So at this point, and having shared both in terms of the policy as well as the simulation of the expected tax, I'd like to thank you for paying attention to this. We expect that you will take this, add more knowledge to it, work in peer groups with the organization, accounting, finance, and legal departments, and go ahead and collect taxes in your organization. Thank you. I'm hand over to our panelists for our Q&A session. Thank you once again for having me, and thank you for staying compliant.
All right, thank you very much, Mr. Akin, for that incredible and insightful session. Your breakdown of payroll and the new tax act in Nigeria has given us a lot to think about and act on. Like our keynote speaker has said at first, taxes can be stressful, but so is forgetting your Netflix password. We survive both, actually. And also, as you can see on your screen, we still got a quick poll running, nothing too serious, just a little insight from you. Please kindly hit on the button and let us know your thoughts.
Thank you very much, Delapo. It's now time to ask our panelists some questions. So I'll be going first with Diana. Hello, Diana. Diana, I have a question here for you. It says, how can payroll professionals stay updated on future tax reforms? Let me take that again. It says, how can payroll stay updated on future tax reforms?
Okay. Payroll professionals can regularly monitor official communications, information circulars, or regulations issued by government authorities in accordance with tax laws. You can also subscribe to newsletters from professional service firms like PwC, EY, KPMG. They publish timely tax alerts, tax reform summaries, and memos for public consumption. You can also be on the lookout for conferences, economic forums, and webinars where you can speak with tax and accounting professionals during a question and answer session. Thank you.
Thank you very much, Diana. So a question for Taiwo. Mr. Taiwo. So it says, how should HR and payroll teams prepare for audits related to the new law? How should HR and payroll teams prepare for audits related?
Oh, great. Yeah, thank you for that wonderful question. Right. So HR and payroll officers can prepare for audits by first, like Kini speaker mentioned earlier, you have to stay informed, just like Diana also mentioned. You need to stay informed, know the changes from what is obtainable right now, from what you are expected to do later on. So the first point is to stay informed, right? And afterwards, yeah, you need to properly document, your transactions, like activities that happen in your organization that have to do with payroll, tax related issues. You must ensure that you properly document them. It is preferable that you use electronic means of documentation so that there won't be any loss, right? And the next thing for you to do when you are, you have stayed informed, you have like proper documentation, you need to implement the changes, right? So for example, like Akino Speaker mentioned the changes in the tax table, the tax band. You cannot implement the existing tax band in 2026 because this new tax act is coming to effect in 2020 January 1st. So you need to update your tax band, right? And afterwards, you also need to implement what I term as the dispute resolution system, because there are times that there may be some variances in your remit. So you need to have that system in place so that you will not fall short of the law. Thank you.
Okay, thank you very much. So Diana, I have a question here for you. It says, does the new act provide any tax reliefs, exemptions, or deductions for employees? Take that again. It says, does the new act provide any tax reliefs, exemptions, or deductions for employees?
Yes, it does. So the new act has a more progressive personal income tax structure. So individuals that are earning from 800,000 naira or less per annum will now be exempted from tax, while higher income earners will be taxed at a higher rate up to 25%. A consolidated relief allowance has been replaced by a rent relief, which is equivalent to the lower of 20% of annual rent paid or 500,000 naira per year. So the new act also increases the tax exemption threshold for compensation for loss of employment or injury from 10 million to 50 million naira. Then the statutory deductions like pension contributions, mortgage interest, National Housing Fund, and National Health Insurance Scheme remain tax deductible. Thank you.
Thank you very much, Diana. And for Taiwo, we have a question here. It says, what best practices can organizations adopt to transition smoothly? I repeat, it says, what best practices can organizations adopt to transition smoothly?
Yeah, great. So I think the best practice that organizations can adopt in this transition period is basically to put their books in order and ensure that you have accurate record keeping, right? Update what you need to update, implement the changes, just like what we have heard earlier from our keynote speaker, also Diana. And I also believe that for you to transition smoothly into this new tax act, you need to look at the benefits that you can get from this tax act. Because from what we've been hearing all this while when the law was passed in June 2025, many people were skeptical. Many people don't actually know what they tend to get from this tax act. So you need to look at the benefits, look at where you can, get reliefs, just like we have the rent relief of 500K maximum or 20% of your taxable gross. You need to know where you can get the benefit, then update. Then your transition will not be difficult as many people tend to look at it right now. And of course, you can always reach out to us as human manager. We can help you out in this transitional period, and you are good to go. Thank you.
All right, thank you very much. We'll just take a moment to appreciate the brilliance. Our panelists just served us a payroll and talk like it was brunch. And also a big shout out to all our speakers too for making the topic that causes mild panic among most people feel like it takes up with better vibes. Thank you very much. And now we're going to be having a question from the audience directly to our keynote speaker, Mr. Akin. So, Mr. Akin, I have a few questions here from the audience. These are quite interesting questions, actually.
Yes, go ahead.
All right, our first question from one of our audience says, can we describe car allocated to sales reps in the course of doing their jobs as workflow or BIK?
Okay, thank you for that. That's a very, very good question. And I think a lot of that will depend on your company policy, first of all. The truth is that a car can be a walkthrough, just like a laptop can be a walkthrough. But it can also be like a status car or some sort of benefit. I think the organization will need to be able to defend why they are classifying a particular element as a walkthrough. So, for instance, if a car is a walkthrough, your policy will have to define that. For anybody who's a sales rep in this company, they are entitled to a car, and that's considered a walkthrough for them. Otherwise, the law will take the strictest approach. The truth is that when these tax guys come around, they like to take the strictest approach. So it's all on us to be able to document properly, take our policies and our procedures to show that we have defined elements appropriately. So I think that's the best way I can answer that. Again, we always say, also speak to your regular tax accountant, your legal team internally to properly define the details of this. But at the high level, a car can be a walkthrough, but it must be specified as a walkthrough. There is documentation showing that it's actually a walkthrough.
All right. For the second question here from our audience, if a couple are both corporate workers, can they both claim tax relief on the same rent for an apartment they both live in?
So the law is basically silent on this. It doesn't say because you claim a particular benefit, your spouse can't claim it. As long as there's evidence that they are also renting an apartment, they are also staying in that apartment. So the idea of it, obviously, we will look more at what the industry, the ecosystem says about that. But for now, there's no explicit instruction that says that the couple cannot claim. Also remember that historically, the Nigerian tax law has always allowed couples to share certain benefits, such as benefits of dependents, benefits, tax relief on children, and things like that. So if there's a possibility, there's a very strong chance that that will be a claiming benefit for both spouses. However, we continue to look at the industry for more feedback, and then also encourage you to talk to your tax professional.
Okay, that was a wonderful insight from Mr. Akin Honjola. Thank you very much for that, and we really appreciate your insight and what so far we've learned in this session. Okay, I believe just like that, we've all made it through payroll and taxes without falling asleep. I would say that's a success for both of us and to everyone in the audience too. And also remember, we still have a quick poll. The poll is still running, and please kindly hit the button so we can know your insights.
Okay, I also saw a question from the audience that said, can basic salary be split into non-taxable items to reduce the effect on the salary? Well, that question has been answered a long time. Basic salary is always a taxable item. You cannot really split it into taxable and non-taxable components. Previous tax laws and even the current one are maintained that. In fact, all financial benefits to employees are considered taxable, especially the ones that give their gross pay and their net pay. So base salary naturally eats it and considered taxable in its entirety.
Thank you, Mr. Akin. There's another question here. It says, if a couple are both corporate workers, can they both claim tax relief on same rent for an apartment they both live in?
Okay, so like I said earlier, the law doesn't say specifically they can't. And historically, Nigerian law has allowed for couples to share certain benefits, including relief on children, relief on dependents, and things like that. So we anticipate that that will also be the behavior. However, we continue to look to the industry because interpretations and position taking of this as far as tax is concerned. This is why we encourage you as HR working with your accounts, finance teams, and legal teams to pay attention to the rules. That is why some of the panelists have given places where you can get reliable content on the nature of the Nigerian tax. Thank you.
Okay, thank you very much, sir. I have a question for Taiwo. So, Taiwo, the question here says, how can payroll systems be adjusted to accommodate the changes?
Yeah, great. So the payroll system is built. I think we need to understand first and foremost that payroll is local, right? So it's not a global. So you can't just generalize a payroll system. So having understand that you need that you can adjust, your payroll system with the prevailing regulation, right? So a payroll system would need to go through the necessary changes that you need to put in place from what we have, like the deductions that are allowed in the law, the reliefs that you have available to you, like the rent relief, like the benefit in kind, like the keynote speaker mentioned earlier. You can actually put them into your payroll system, and of course, you need to properly understand each of these elements of your pay items, like because you can't just use a blanket rule in them. So you need to understand the peculiarity of each of the pay items before you can, still want to make adjustment to them. But all in all, payroll system can be adjusted by knowing what the law says concerning each of the pay items and knowing how and where to, adjust them. Thank you.
All right. Back again to Mr. Akin. We seem to be having a lot of interesting questions from the audience. We seem very curious. And one of them says, is there a generally acceptable template to compute the new tax, taking advantage of the legal deductibles so as to avoid misinterpretation of the law and to avoid falling short of the law?
Okay, thank you. To the person who asked that question, I would say, well, the internet is is full of all kinds of templates. Some of them are more reliable than others. I know some public accounting companies and consulting companies have put that template there. We generally recommend you pay attention to the Big Four in terms of any templates they put out there. But also, this is the kind of thing that your accountants also do. However, at your manager, if you talk to our support team, you can, being a company that we hire professionals also, we can share some templates with you privately. But it will your responsibility to make sure that you have also done a due diligence to make sure that the templates are consistent with your expectations. So yeah, there are templates all over the internet. However, we say pay attention to the Big Four because they are publicly known accounting companies. So they have a big responsibility to the public to make sure that what we share is close to the law. At System Specs Manager, we take the strictest interpretation of the law in our accounts, and we can share with you how our system computes the tax rules.
All right, Mr. Akin, just one last question here. And is medical benefit under HMO a BIK, sir?
Okay, so I would say that medical is a benefit. Now, the law specifically recognizes it under the National Health Insurance as believable items. The law specifically recognizes them. And then generally, insurance have a different approach to how they are considered taxable. So you might be able to, if you are using the Nigerian Health Insurance Scheme, okay, or use any program that's recognized by the Nigerian Health Insurance Scheme, we are able to create as a tax rate. That is, any money you spend on a person is not considered taxable. That is what and generally any money you consider on life assurance is one of the prescribed and recognized life assurance companies. It's also not programmed, it's also not taxable. The same thing for your mortgages. Interest on your mortgage is not taxable. If you belong to any voluntary pension scheme, it is not taxable. And obviously, your pension deduction, the employee leg of the pension contributions are also not taxable, as well as the Nigerian Housing Fund. Any contributions an employee organization makes in Nigerian Housing Fund is also not taxable. So those are the clearly non-taxable or tax-waivable elements of the employee benefit scheme.
Okay, thank you very much, Mr. Akin Omojola, for that insightful session once again. And to that, we are coming to an end of today's session. A huge thank you to our keynote speaker, our panelists, and of course, you, our amazing audience, for showing up, engaging, and making this conversation so meaningful. We've unpacked payroll, decoded the new tax law, and hopefully make a complex topic feel a little more humane. Whether you join us from your office, your living room, or somewhere in between, we're grateful for your time and energy. Until next time, stay safe, stay sharp, and stay connected. Have a fantastic day.
Thank you.
Maintaining your organization's payroll and managing employees' database manually could be tasking and time-consuming. And like all businesses, you would like to access employees' data and payroll with a few clicks and put an end to all your worries. You can achieve this and much more with our web-based Human Manager, which delivers impressive ease, eagle-eye access, and security to users like you. First developed over 25 years ago, Human Manager is one of the best web payroll and HR management software solution available today and is preferred by thousands of businesses across multiple industries globally. Human Manager makes it exceptionally easy for businesses of all sizes to manage their HR and payroll needs conveniently at any time and from anywhere in the world. With our integrated system, you can enjoy round-the-clock access, end-to-end multiple payroll processing at its best, appraisal management, configurable workflows, interactive dashboards, leave processing, claims and reimbursement management, and so much more. Our employee self-service empowers your employees with easy and quick access to manage their profile, process claim and reimbursement with no headache, apply for leave, on-duty and overtime payments, generate pension as well as tax and pension deductions analysis, and a lot more. With Human Manager, you can also access an employee information system for updated personal and corporate information, leave management for all leave types, and paid time off work for different grades of employees. Automate your expense management including claims, reimbursement, loans and advances, all under one umbrella. Stay in charge of exit formalities through our exit management model. Deploy timesheet for the control of labor costs and working hours. Boost performance through our industry-leading appraisal model. Visit humanmanager.net for a demo today and enjoy the benefits of trailblazing payroll and HR software solution. For more information, email us at info@humanmanager.net. Maintaining your organization's payroll and managing employees' database manually could be tasking and time-consuming. And like all businesses, you would like to access employees' data and payroll with a few clicks and put an end to all your worries.